let me start by a small victory lap. I have to say we expected that early January. When the coronavirus started, it just didn't feel good. And the first impact would have been oil, and it turned out to be oil. Yes, demand will go down, and this is when Saudi Arabia wanted to react. Now, what happened a few years back, oil prices went down because the OPEC broke down. It's a cartel. When a cartel doesn't work, prices go down. This is what happens. Today, OPEC has broken down again, so prices have gone back down again. So Saudi Arabia is flexing muscle the same way it has done a few years ago. A few years ago, it was successful in its strategy, and it's a strategy we call in French vache maigre. It's a marketing strategy or supply chain strategy where you flood the market to gain as much market share as possible, break the price, and crowd out competitors. So this is what Saudi Arabia is doing today.
When you think about this a bit more broadly in terms of how long they can sustain themselves at levels that we're seeing right now. Earlier in the show, we were asking Dan Jurgen, the big daddy of oil, how quickly we're going to see $20 per barrel, and he didn't rule it out. How worried should folks in this region be? Because as you know very well, everything really does revolve off the price of oil and investment.
Absolutely. However, it's a region that has substantial foreign currency reserves. It can sustain 1 year, 2 years of strategy like that. Others cannot. I think Russia will not sustain this for much longer, and I think Russia will come back to OPEC Plus, just like it did previously in a few years ago. So this will not last long for competitors of the GCC. I'm not worried about the GCC. I'll be more worried about the others.
Maddie has a question.
Well, I was going to follow up in a similar vein, Hadley. Hi, Ryan. How do you trade markets then in the Middle East, given the peg to oil and the very, very close peg that these markets have to oil? You only have to look at what happened across the region yesterday. You have to look at what's happened now to Aramco shares listed on the Tadawul in Saudi Arabia. How do you hold positions and actively trade in the Middle East if we have oil sitting at $20 a barrel?
Well, that's a very good question. It's very relevant, Matt. So basically, around mid-January, we advised our clients, ADSI clients, to be relatively risk-off and increase their weight on gold, cryptocurrencies, and other asset classes that could be a hedge. Now, with regards to investing, obviously, we need to invest. The key is to go for dividend-paying stocks. Obviously, interest rates are near zero or negative, and sometimes equities cannot go negative in yield. So the key is to do stock picking rather than asset allocation and go for dividend-paying stocks and fasten your seatbelts.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.